Tell me.
The low that happened, the turtle soup, it could have digged deeper into that weekly FEG, right?
No, it couldn't.
How could you say for sure that it couldn't have digged deeper?
Because I called it.
Because of the breaker?
See, seriously, all jokes aside, let's see why it could not have dug deeper, right? The main reason being, I called it. Second reason being, let's see right now. Where's Z1? 1 second. I have a question right now. Hold your question. Where's Z1? Muted. Vanished. Poor guy. Z1. Where is... Now, if you're binge watching this, right, as an entertainment, then you're not going to get anything. So I know some of you are already taking away stuff. Good for you. I see you, by the way. I see a bunch of people, a bunch of notable people. Always good to see you passing around. And where is Z1? You have to rejoin, my friend. Z1.
You know that
I got
previous question.
So you have a question, but before you ask the question, I have another question to answer. So let me just answer that. Allowed to speak. Z1, you have to rejoin, my friend. You're muted. It's not allowing me to allow you to speak. It is saying this guy records too much. He can't speak anymore. Allowed to speak. Exit, re-enter. I'll be back to you right now. So, why could it not have dug deeper? Why could it not have dug deeper?
Breaker on the left side in November.
What are you saying?
The breaker in November on the daily.
Very good. And we have, of course, this is a classic. Why do some gaps remain unfilled, right? Because of balanced price ranges. Right?
Yep.
So when you have a inverted PD array, so let's assume we were on a sell side, and we've now flipped to the buy side of the curve, right? The PD arrays on the sell side of the curve, like this one, right, are going to be used as support on the buy side. And they'll create PD arrays similar to them on the buy side. And you can go and backtest that one, and verify it. It's a basic ICT stuff, nothing new, right? So that's how you stop price from going down. Plus a breaker. And we know that breakers prevent gaps from filling. So when you see a breaker and it does fill a gap, then expect the gap to be left partially filled or completely unfilled, right? The monthly breaker as well, over here. And here's another one, which is a higher time frame gap will leave a lower time frame gap unfilled. Copy that one. Go and paste it on Twitter. Right? So the monthly gap over here was filled, right? The monthly gap was filled. So the higher time frame gap is going to leave the lower time frame daily gaps unfilled. You blend that with an OTE over here. So these daily gaps, not daily daps, daily gaps. The question is, how do you know this one going to fill? This one. That's how I know, because of the BPR, the breaker over here, right? As we said, we can invert PD arrays and reuse them. But the most important thing for me is turtle soup prevents gaps from filling. Right? If you get a turtle soup and a shift on the lower time frame before the gap, what do? You wait? Nope, you enter. Right? So all these reasons blending together to give you no reason to expect a dig deeper. Could it have? Maybe. Was it likely? Nope. How do I know? I just know, right? It's chart time, tape reading. The more you see something, the more likely movements you see. Like just by intuition, when I saw this happen, right? Just my intuition. When I saw this happen, then it was extremely unlikely in my experience that we do this, right? That we go and we simply go and do this. It is an extremely unlikely price movement, right? But that's not a scientific explanation. Intuition is not a scientific explanation, which is why you have those measurement tools, the data ranges, buy low, sell high, higher time frame FVG into a lower time frame liquidity pool, and boom, you get a nice, juicy turtle soup. Right?
All the confluences are here, including open, high, low, and close, or open, low.
So it was exactly, and we come to the final part. I think you saw this with me before, right?
Sorry?
Zoe.
Yeah.
If your Zoe was talking.
Yeah,
you saw this with me before. Right. Okay.
Yeah, I was watching this.
I recognize the voice. So, replay. What happened? Let's go and check the monthly profile for power of 3. Right, so time. So you have the beginning of the month, March, and you have the end of the month, April. April. Right over here. So, we have week 1, week 2, week 3, week 4, right? We had accumulation, week 1, manipulation in week 2, right? So what happens when, which is pretty much the London session of the monthly candle, right? So what happens when you get a manipulation power of 3? Think in power of 3. What happens when you get a manipulation into a higher time frame PDRA, 20 discount, 40 discount, 60 discount, right? All these discount ranges, plus a higher time frame PDRA, plus a liquidity pool in the previous 20, 40, 60 days, plus power of 3, plus an OTE.
It's the perfect recipe for a smart money reversal.
You have this. This is why I was super confident and became a Bitcoin maxi down here, right? Temporarily, for a while, not for long. Right? So this is why right here, as it fellas, it is time to blast to 25, 27, and 32. Right? Turtle soup. But it's not only a high and low. That's the mistake you're making. Right? Those who send me on Twitter saying, "Oh, I tried a higher low and it didn't work." Fuck you, Romeo. Right? No, fuck you. You messed up. You go and check. You look at price holistically. Right? You don't look at price from one angle. You look at the whole. Ideally, of course, you go through the whole process, which is the good old ICT process, right? Good old mentor. The process, which is number 1, seasonal tendencies. Number 2, monthly bias. Number 3, weekly profile. Right? And number 4, time of the day. Of course, monthly bias with the data ranges are between these two, right? Because the monthly bias is the data ranges, 20, 40, and 60. And it's also the way it's two things. It's the data ranges and it's the way you expect the monthly candle to print. Right? Bias versus narrative. Bias is why should price go where it's going. Narrative is where is it going. Right? So accumulation, monthly bias, right? We expect a bullish candle on the monthly. Let's break this down from 0. Monthly. seasonally, of course, Bitcoin doesn't have that large of a history to have a seasonality yet, but it eventually will. When it lives long enough, it'll have a trustable. It does have a trustable seasonality in September and October, which is September has a rally at the beginning of the month, and it has a sharp decline mid-month. Right, that is a seasonality trick on Bitcoin. So the point is that seasonality not that reliable. So I'm not going to consider it right now. Monthly bias. We're expecting a bullish monthly candle. Why? Because we are inside of a higher time frame monthly PD array order block here. Now, what are the criteria for an order block? You guys know by now, right? After all this time following me, what's the criteria for a good order block? For a high quality order block, anyone knows?
Created in a liquidity pool. Sorry, you go, Robin.
So not just choosing any down close candle, right? To choose a high quality, high probability order block.
My should voice be the one taking liquidity.
One takes liquidity. And
thick candles.
Number 2.
2 has an FVG.
Very good. Number 3.
3 is a thick candle.
There. Who are you? Very good.
Robin.
Robin, right. It's a thick, heavy, bulky candle. Right? It's a nice. It is a thick candle, right? So, based on that, the monthly bias is up, right? Go to the weekly. The weekly bias is also up, right? And based on those two, you can refine an entry to time of day, right? Weekly profile and time of day. I won't be touching on that because that is all on ICT's content, right? Maybe I'll show one example. I've had a turtle soup intraday, but that is something I will not be talking too much about. So weekly bullish, monthly bullish, and then you go to the daily. So you draw the PD arrays on the higher time frame, right? You draw the opening price. As you know, we want to buy below the opening price when we're bullish, and we want to sell above the opening price when we are bearish. So opening price.
Not a chill.
Now you go to the daily. Monthly bias up, weekly up. You're going to draw an opening to March, open, close. In a bullish market, right? This is pure ICT. It's not pattern trading. It is the way he intends you to learn it, right? Even yesterday in the space he made, same thing, but no one's willing to see, right? Everyone wants to find a pattern. In a bullish market, we buy below opening price and expect a rally, especially when there's a higher time frame PD array, and that goes into when can we anticipate a classic buy or classic sell candle, which won't be spoken about over here, right? In this one, but that's a little hint. You want to buy below the opening price into a higher time frame PD array, which coincides with the liquidity pool, plus OTE, right? Dealing range. And you get a rally. Does it take some effort? Yes. Does it come intuitively afterwards? Yes. Is it a one shot, one kill? Yes. You enter over here and you chill. You don't have the sufferings of people who are waiting for an entry up here. And they get nothing. They get an IFED over here. And they're afraid it's going to come down here anyway. So they don't enter. And it rallies, right? So buy below opening price in a bullish market and sell above opening price in a bearish market. It's ICT 101, right? That's the application of power of three. Using a valid, high-quality order block, the monthly. So we can now get into the entry techniques. That's example number 2, right? An in-depth example. We got example number 1 on ES, right? Let's go to ES. Example number 1 on ES. 500. The same concept, right? A lower time frame market structure shift is less relevant than a higher time frame PD array. So always focus on the higher time frame, always. And the second example is BTC, USDT. Right? Boom, boom. And let's look at the power of 3 on the ES chart. Just for practice sake. Right?
Romeo, so these were for short-term trades, right? But will you be talking about intraday scalps, things like that?
Very briefly. The main focus is on the logic, right? Because you can apply what's over here on the lower time frame, right? You can apply what's over here. I'll show you one example, all right? Which I took myself. And that should give you a guideline to what to look for, right? Just to help her, as you know, all the information I'm giving you is a complement to what good old ICT is doing, right? The only new things you might see are, for example, the lower time frame shift versus the higher time frame PD array. There is nobody who said that, right? Shift is less relevant than a valid higher time frame PD array, right? And when you see a key level being banged more than once, if it's a second time, don't be afraid. Right? It's either a failure swing or a turtle soup. These are details of price, which you will get once you get used to them. So. Weekly open. Weekly close. We're digging into, now look at this, notice this thing right here. Accumulation, right? Manipulation, distribution. Down here. So weekly open, it rallies, expected decline. Right? At least until New York of the week. We're digging into a weekly FVG on a Wednesday, right? So the higher time frame is bullish and the lower time frame is bearish. Which one do we trust? We trust the higher time frame, not the lower time frame. Because a lower time frame market structure shift is less relevant than a higher time frame PD array. Now, pretty much the same thing, nothing different. So that is foundation done, and smart versus dumb money, a heavy one, right? And the higher time repeat array, done. The lighter ones, at least for now, are the market profiles, and that's it. It's pretty much the ranges and trends, right? So it has taken more than 4 hours. It has taken more than 4 hours, but that's fine. I don't mind. The important thing is that the information reaches you, right? So
Hey, there's a
I
question
don't.
from
I don't think
Sahil.
you. Oh, sorry. Go ahead.
Yeah.
You don't think
He's
I what?
asked. Sorry.
You don't think what? It cut off, my friend. You said you
Go
don't
ahead,
think what?
Robin.
Okay, yeah. Romeo, it's Robin here. I have a question from a guy called Sahil. He's not able to unmute himself. So he's asked, could you please ask when a market structure shift would be important for order flow and when it wouldn't be?
Say that again.
When a market structure shift would be important for order flow and when it wouldn't be.
When is market structure shift important for order flow?
Mm-hmm.
Again, you're telling me to teach you something that ICT has taught you, right? But I'll give you my opinion on the shift, right? Which is what I gave you just now. If you've been taking notes, what I've said already is more than enough, which is, first of all, it's a logic, not a pattern, right? As we saw in Bitcoin, as you'll see every single day on every single time frame. It's a high. It's an accumulation, of course. It's a false bottom, right? A false breakout, enigma pattern. A dig deep. So they think the bottom is in. A dig deep inside of this low, tripping them up. And then a true breakout, which does not allow you to participate. For turtle soup, this is crucial. If you're trading turtle soups, which I'll show you how to trade those two things, which I did right there, right? For turtle soups, this is crucial, right? A true breakout does not allow you to participate. Breakout. So entry 1 is over here. Entry 2 is over here. Entry 3 is a deep retracement. Forms an SMT over here and rallies. Right? So this is the market structure shift as seen over there. Right? So it's a logic, not a pattern. Some of you will see this regardless of how many times I say it's a logic, you'll still see it as a pattern. I can't help you. I can't help you. Some people are just destined to fail, right? But those who observe, it is a logic, not a pattern. And most of the time, you'll have this to filter out the patterns. The higher time frame PDRA is a filter for patterns. Right? Now, entry techniques. Before that, of course, we have the market profiles, trends, and ranges, which is the bread and butter and the meat of it all. So this gives you a strong foundation to trust. All right. Now, do you guys want to break or do you want to continue? I've been talking for 6 hours plus. I can go on for 10 more hours.
I would like a break.
I don't mind. All right. You're watching, huh? I'm the one who's talking.
I think we have a break.
If you want to break, you want to
we
break.
should take a break.
It looks like we might finish it today. Who do you guys think?
I'm
Including
more than
the
happy
entry
to
technique.
continue, mate.
Including the entry technique at the end, right?
I'd like a few minutes to, get a good
we take a
headspace.
breather. We take a breather, all right? Digest the information, like 10 minutes, 15 minutes, and then we continue with the profiles and the entry technique. What do you think?
I think that
I'm
sounds
fine
like
with
a
that.
good idea.
Good.
All right, excellent.
And during the meantime, could you add people who really want to speak, because they've been DMing me this whole entire time, and I couldn't even pay attention.
You become the spokesperson, huh?
I guess so.
All right. Well, you're a charter, so you probably already know the importance of a higher time frame PDRA.
Hey,
Juicy stuff is now.
I'm just gonna say, even if you're a charter member, that all it means is you just pay for the mentorship. That's it. Not all charter members
Exactly.
are proficient.
I know that.
Trust me, there's a lot of people who's struggling.
Exactly, because they struggling either financially or with the charts, right? Because they don't have a model. That's the issue. Is when you're struggling, it's only because you don't know what you don't know what you're looking for. Right? You just know everything. Shift breaker, order block, FVG, breaker, FVG, order block. What's your model? I don't know. A breaker, FVG, order block, shift. Right? Bots. You got to think. You got to pick a model and stick with it. So there's a 10-minute break for you, and we continue. I did not expect to give it all at once, but it is what it is.
I have a question.
Tell me.
Yeah, how would you measure the high and the low on lower time frame, like an hour or 15 minutes?
How do you measure the higher time frame?
Exact same
How do
way.
you? Yes. Now on the lower time
Like
frame, you can do the same thing. You can do the same exact thing.
last 20 candles, last 40
Last
candles,
20,
last
40, and 60, right? But the data,
yeah.
me personally, I use them on the higher time frame, right? You can use them on the lower time frame. You can use SMT on the 15-second time frame. You know that, right? You can use whatever you want, wherever you want. It's not a matter of can I do it. You can do many things. You can trade a 5-minute candle profile with a 1-second candle entry, right? You can do that.
Yeah.
But what's my style is one shot, one kill, right? So I can do many things. I can scalp all day long, but I choose not to, right? Not personality, because you can trade whatever you want. Just my lifestyle, the way I live, the real life work that I have, right? My real life doesn't allow me to go and count 20 candles back on the lower time frame, but it is all fractal. Everything is fractal. Everything is a fractal. So every single thing I said just now, which applies to the higher time frame, is applicable to the lower time frame, and you can see right now in front of you, right? You can see right now. Same thing. Count back 20, 40, 60 candles. Counting, it has a bad rep. Same thing. Count back. 20, 40, 60. Lower high, great. Dealing range, right? The fib measurement range. Lower high, low, right? The swing high, right? Visually, just a bare bones, just a look, right? This comes with intuition. Lower high, low. And then you blend that, because you can say, you know what, Romeo, what about this? You would have been caught over here, right? Yes, that's why we have the PDA rate, the weekly FVGs over there, to filter out a false bottom. Write this one down too. False bottoms and false tops are filtered out with a higher time frame PDA rate. Right? This is the key. This is the birth of every single turtle soup trade you've seen me call and take. Every single one you've seen, the ones that made you come and pay me money to talk, right? I took them using a higher time frame PDA rate every single time.
But
when I don't pay attention to the higher time frame,
right, yeah,
what's up?
go on, please.
Tell me.
I was going to say that like ICT teaches that you need to have a set of time frames in which you have 3 time frames. So my time frame could be different from yours, right? So can we trust, like, if my higher time frame is 1 hour or 4 hour?
What does this
can
mean?
I trust that
Kaif?
PDR?
Your name is Kaif?
Yeah.
All right. You can trust it. I'll tell you how. You can trust the higher time frame by understanding what a higher time frame means. What is higher time frame?
Time frame that is higher than the current one.
That's it. It's that simple. And you have that video again, as I've mentioned. I'm a complement, right? A supplement to ICT. He has taught me 90% of what I know, right?
Yeah.
Most of it. The rest of it is all Wyckoff, a bit of GAN, right? Classic technical analysis. That I still use some of them conceptually. The things that work within them, I use them till this day. So I'm not like your typical ICT trader, right? Who doesn't use anything outside of ICT, who never knew the markets except within the lens of ICT, right? That's not me.
Hey, Romeo.
So, buddy.
Robin here. Yeah. When you
question.
when you
Tell
show
me.
the
What's up?
weekly time frame, yeah, I'm audible.
Cred că
I
mai
can hear
durează
you,
o
yes.
jumate.
Yeah. When you show the weekly profile, right? You said that there are 4 weeks. Week 2 or week 3 being the manipulation, right? So the same thing on a 4-hour candle gives us the 1 a.m. to 5 a.m. London kill zone.
The same exact thing.
Plecați Zeno. Ce să facă el?
And that is the reason you focus on 3 to 5.
Correct.
Okay. But my question is, why 3 to 5 but not 2 to 4?
I mean, you can 2 to 4. I just find more setups in 3 to 5. But
Okay.
the classic, the way IC teaches it, right? He teaches it to look for the Judas at 2, right?
Right.
2 a.m.
Mhm.
London. Only, not randomly. Again, another misconception, which is just randomly short any rally. When you're expecting lower prices, right? When you're expecting a classic sell or buy candle, what are the time frame? Because it's fractal. When you're expecting a classic sell or buy candle, then in that case, that is when you expect a rally, if you're bearish, and then a decline, right? Which is you're using the opening price as a reference point, overbought and oversold. Right? That's what you're doing.
Okay.
No pattern. Your pattern is in the wick, as you said. Good old man. I'm positioning myself in the wick. That's what I'm doing.
Okay. And regarding the same question, if I go to the 1 hour and treat that as a 4-hour candle, the macros that ICT gave, the 1050 to the XX50 to XX10, they are the closing and the opening of the hourly before and the next candles, right?
Yes. That is correct.
Okay. So that is the significance of those macros.
Yep. It's all if you sit down, if you really want to dig in, if you sit down and reverse engineer the open, high, low, and close of the candles, right? What time certain swing points form, right? There's always the same time window, right? Where highs and lows form. The same time where liquidity purges happen, right? As we saw in Bitcoin, right? At time, the London session of the monthly candle, right? Over here is Wednesday, a typical power of 3, right? So if you sit down and dig deep into it yourself, you'll find some pretty cool stuff. Me personally, I found some stuff, but it's noise to me. Why? Because it's too low of a time frame for my lifestyle. So I think it's wiser to just do what he did, what he taught to do, which is buy in a bullish week, buy below opening price, and a bullish day where you expect a bullish candle to print, you buy below the opening price, and that's it. So keep it simple.
And what do you mean by reverse engineering? I know it's a noob question, but
reverse engineering is simply dissecting the charts. You won't learn from social media. You won't learn from online people, right? You'll learn earnings afterwards. Not at the beginning. You will learn from one person showing you the way, not teaching you, just pointing towards the direction, and you will go and study it yourself. That's the way you learn.
right. Thanks.
If you expect to be spoon-fed, right? You will never learn, never,
Noted.
because then you will rely on his spoon feeding, right?
Right.
So the best way to learn, even turtle soup, whatever I was talking about for the past 3, 4, 5 hours, the best way to learn is, which is an important point, right? Because it's a lot of talk, it's a lot of concepts. Each one is applicable as a model by itself, but the best way to learn is through
By doing it ourselves.
no, is by watching and predicting the candles print live. I saw questions saying, "What is tape reading?" Is watching.
Right.
Of course, the volume fellas, the order flow fellas, they have another opinion, but I don't care. Tape reading for me is predicting the candles, watching them live, right? Just and noting their behavior at certain times of day, days of week, and so on. So you look at them, how they react at certain highs and lows, at certain PD arrays, at certain times.
And does news matter towards these times? For instance, I see many times like the reversal of the manipulation happens at either 8:30 or 10 a.m. and that's because of news. Do you
The news
factor that into
matters
account?
only for a momentary reaction on the lower time frame, right? So that's why when you trade news, if you're into that, right? Everyone has some weird kink they're into. If you're into trading news, then you trade the news after the move has started, right? Not at the beginning of the move, because you're risking getting stopped out unless you use a higher time repeat array entry, right? Or you really know what you're doing, then you can do whatever you want. But that's it.
I guess it's
These kind of
more
noob
like
questions, by the way. These kind of noob questions, by the way. Huh? You guys are
No,
supposed to be
I guess-
intermediate, proficient.
no. I mean
What is
like my real
Uh-huh.
question is more like do you look at the exact minute? Like, does that factor into your model?
See, what's your name? Let me go check.
Hopium again.
Hopium again. There you go.
Yep.
All right, Hopium. If you're really dialed in, right, which is you go to a... I'm not supposed to... if you're really dialed in, right, you can catch tops and bottoms, keeping in mind the monthly, weekly, daily, and the daily profile in mind. If you're really dialed in, then you can catch swing points, right? Because swing points form at certain points in time. The highs and lows of the days of the week, of the daily candles, the weekly candles, they all form at certain points in time. So if you're really dialed in, you can do some pretty amazing stuff. You can snipe some pretty good stuff.
Yeah,
But
I've
again,
been.
this all happens all on off social media. If there's one recommendation I would give to everybody who is learning, right? If you're already know what you're doing, you can do whatever you want. But even for them, like social media is a distraction, especially for learning traders. It is who don't have their model yet. It is a distraction because you're comparing yourself to others. You're just you're not focusing on the main thing, which is tape reading and charts. You're too concerned with what others are doing, how well he's doing, what's how many RR trades did he catch today? Huh? How many 1 to 500 RR trades did he catch? The master, for example, right? Or whatever goofball is doing, whatever. Right. So the best way to learn, in my opinion, is tape reading it and getting familiar with it, making it your friend.
I have a
Yeah,
question.
but familiarizing yourself with the charts, with the turtle soup, with how it happens, with at the high and the low, what happens at the high and the low, right? What happens over here? You go up here on the lower time frame, you look, and that will be discussed in entry techniques. Tell me, the break's over and I'm still talking. Tell me, what's up?
No. Okay.
let's say, for example, the turtle soup is about to happen. Does it always have to touch or react from the HTF PDF array, or is it okay if it is slightly off from the level, key level?
It will always dig into a key level.
But if it is the
If it
case,
It doesn't.
I
dig into
observed
key
your
level.
Ethereum 4 or so.
My Ethereum what?
If it is the case, you said it has to always dig into the PDF array, right? So if it is the case,
Almost
I observed your Ethereum 4 hours chart. Did not dig into the weekly FVG, and you were confident
because one of the reasons that gaps are left unfilled is turtle soup, right? We saw that on GBP. If you remember the analysis I posted, right, for GBP, gorgeous, just gorgeous. And we'll go through a bunch of just to revise the importance of the higher time frame right now, as soon as the break's over, which is now. So right here on GU, all right, on GU weekly. Of course, as we know, price is price. It doesn't matter the chart. Price is price. The only difference is some markets are consolidating and some are expanding. You just pick the expanding ones. So right here, you have this higher time frame gap, right? Everyone was expecting it to dig into it. Yes or no? Probably, right? But a turtle soup will stop a gap from filling, especially if there's a lower time frame shift, right? A proper shift in structure, from a proper shift in delivery from bearish to bullish, then you can expect the gap to be left unfilled. And that answers your question, my friend.
When you
Now,
said
just to-
consistent delivery, is that the
1 second before I continue with the rest of it. Let me dig into your minds what I'm looking for in my turtle soups, right? And from now on, my friends, you guys need to 1 second. Let me send you the some pictures of what I look for, right? Nothing new. It's simply the higher time. It's simply where does turtle soup occur, right? Where does turtle soup occur? So the break is over. I'm guessing we're good to go. Are you guys ready?
Romeo,
good.
Yes.
I gotta say this right quick. Everyone who's DMing me, please. I asked him twice already.
Okay, listen. Whoever has the mic now has the mic, right? FAQs. I'll open either the chat temporarily for FAQs, so that I can see the most common question and answer it collectively, right? Because it's inefficient and it's not going to help anyone if we go and try and answer everyone individually, right? So collective answers. We're too many people for that. If we were like 10, 20 people, then maybe. But we're 1,000 people, though. So collectively answering the questions is going to be what we are going to do after the sessions are over, all right? I'm not even tired, not even a fucking bit. So I had
Excuse me?
something in mind. Tell me.
Can I ask a question?
If it's interesting, yes, sure. Tell me.
Okay, earlier you said that you're going to show us when a support level fails, go to the higher time frame. If a 5-minute support PDRA fails, go to the 15-minute, and so on.
Yep.
Can you please
That is correct.
once?
What are you saying?
Can you please show that once? An example of that.
Here's an example right now on ES. You don't need to look far, my friend, to see the concepts working. Right? So this is something I had paid attention to I had called on Twitter as well, right? Which is, I said, if this daily order block fails, right? Focus. If this daily order block fails as the weekly low on Tuesday, then I'm waiting for it in the weekly FVG, right? So the daily order block failed. We closed beneath the mean threshold. So we can expect the weekly FVG to be the next support, and it did. Yes or no?
Yes.
That's it. So the daily PDRA is failing, which means we go straight to the weekly FVG, and it held. Yes or no? Do you see the visualization of the concept?
Yeah, I do.
If this fails, you go to this one. So are we ready to go into market profiles? Because I'm ready.
Since you talked about GBP, one thing I noticed was that the reason why price went down one more time and didn't fill in the weekly gap was because it was the CE of the monthly BISI, right?
That is another reason. Is higher time frame
reason?
Gaps. That's another reason, which is higher time frame gaps. Right? They stop lower time frame gaps from filling. I'm telling you a lot of stuff, and if you're not paying attention, you'll simply ignore it.
And I think what you said before was that if price almost reaches the CE like it did before, but hasn't yet, you expect it to soup that low, right, and touch the CE, and then that's when the real rally begins.
50% of any price leg is a good place to look for turtle soup. Write that down and enjoy. Right? 50% of any range is a place where I expect a continuation turtle soup. Right? That keyboard is too loud. That keyboard is way too loud. Right? So 50% of any price leg, any range, is where I expect a continuation turtle soup to happen. So now the differences between the turtle soup. I saw some goofball on Twitter, copy one of my tweets on turtle soup, which I'll be showing you right now, right? So and after that, of course, we're gonna go through the market profiles real quick. We won't go as in depth as I wished because the time is going tight, right? But that's fine.
Deja 4 ore și am mai vorbit 3 înainte și n-am prins.
You'll get more than
Au început mai devreme.
what's needed, much more.
Am dormit și n-am prins.
And I hope someone's recording. It's a lot longer than expected. I've been here since 7:30 a.m. So it's more than it's more than 6 hours. But that's fine. The important thing is someone's recording. Is someone recording the whole thing?
I have a recording of 4 hours 23 minutes going on as of now.
Since 10, right?
I have also recorded this.
Now, to everyone sending me messages saying, you don't love me, please let me talk. I don't give a shit about anyone, right? I'm here to teach. So it's nothing personal, right? I'm here to display something. So it's not about you, right? It's not about you. It's not about you as an individual person. It's about the collective environment of 1,000 people. I can't physically allow each person to talk because that would take all day long and it would not be efficient, right? Neither would it be useful. So collective answering is what I'm going to do, all right? So it's not personal. I am never personal with anyone, right? It's about the idea. Think. So, that being said, yes, Chris, it's a long catch up, my friend. I've been here since 7:30 a.m. And yes, the recording will be available Listen, one of you, this guy called Rip, I'm reading his DM right now. Count 4 hours backwards because we started at 10:10, right? My time, Spanish time. 10:10, 11, 12, 1, 2. All right, so 4 hours over right now. So someone should have 4 hours of recording right now, right?
Yes, I do.
All right. So excellent. If you have one, then excellent, and good job. You might get an extra tip on how to soup turtles. So right now, we go into market profiles and finally the entry technique, which is a whole, which includes the entry, stop loss, and targets. Right?
Da, iartă-mă.
Now, I wish I could go as in depth, but my time is running tight, so I expect to be done by 3:15 Spanish time, more or less. Right?
Și eu.
Scoți pâinea.
3:15 Spanish time. Right?
Then how about we do it next weekend?
It's 1 hour left anyway, right? So we're done already. We're done from 7 to, we're done with 6 hours plus already. So 1 hour extra is what? So we finish now, and then we do the FAQs. And next weekend, I'll give you all an extra hour to answer the FAQs. How does that sound?
More than fair, mate.
So we finish now, and then I'll let you collectively send your questions about the stuff I discussed, right? And I'll answer every single valid, interesting, collective question, right? So think before you ask. Don't ask obvious questions. So, market profiles, which is an essential part of turtle soup, which is why I could have skipped this, but I'm not going to skip it, right? Because it's essential to not get caught in a fake turtle soup, right? In a fake false breakout. That's a shame. So, we have market profiles, as I gave a rough outline of. We have trending markets and a ranging market, right? Trending markets, and we have ranging markets. Now, before I continue, right? A lot of you are probably sleeping by now. I hope not, for your own good, right? So I hope everyone's active and watching and taking notes, because the best way to learn is to actively engage, whether it's writing or talking, right? That's the best way to learn something, or even revise, not even learn. Right? The best way to revise and learn something is to actively engage in it. Plus you have this recording later on to review as much as you want. It is yours. And I would hope it stays in the group, right? I would hope it stays within the walls of this group. Even if it does somehow find a way partially outside, then it's too dense anyway, so nobody's going to give a shit, right? But I hope that you value the knowledge, the environment, and respect the money you paid, the time you invested, and my throat, which has been talking for like 7 hours, right? You probably won't give a shit anyway and do it anyway, I know. But that is my, that's what I can say about it. That's what I can do about it. So, trending markets and ranging markets, all right? What is a trending market? Anyone? Answers.
In a bullish trending market, highs are being taken constantly.
Highs are being taken? Nope.
Expansion.
As we all know, I look at the market from highs and lows, right? Perspective of highs and lows. I don't look at But I do look at order flow, right? Order blocks, FVGs, which one is being respected, which one is being broken. I'll show you an intraday example as well, just so, because I know that the ICT community is a bunch of scalpers gambling the 1 minute chart, which can be done. But if you can't even call the higher time frame correctly, then you have no business trading the lower time frame, right? That's a note for all of you. You're trading the lower time frame without first mastering the higher time frame, which is why he also, even in his mentorship in the core content, he teaches the higher time frame first, and the last thing they talk about is the lower time frame. All right. So what is an uptrend, my friends? Someone said highs being taken. That's incorrect.
Well, not taken, but broken. Like broken.
Very good. Excellent.
Violently.
We're gonna go and do some good old hindsight, right? Let's go and do some good old hindsight for once. I think I've earned the right to do some hindsight, which is not a hindsight because I lived it in the moment, but it's hindsight to you guys because you did not witness it. So, but of course, as we know, history of the charts is a gold mine. History of price action is a gold mine, and it repeats itself for those who have eyes to see. So, a rough depiction of an uptrend. What classic analysis teaches you is higher highs, higher lows, right? Prices climbing, higher highs, higher lows, correct? What actually happens is, I mean, you've probably never seen price do this in your life, right? And go and move in this fashion. Never. What happens is this. And if you say you did, you're lying. What happens is this. Let's include that one. What happens is rejecting highs and rejecting lows and breaking highs while creating higher highs and higher lows. Rejecting lows, breaking highs. Rejecting lows, breaking highs. And what is a downtrend?
Breaking lows, rejecting highs.
Excellent. Beautiful. This is the recipe, as you'll see right now. Rejecting a high and breaking lows, right? So then we flip from breaking highs, rejecting lows, to breaking lows and rejecting highs, right? So this is what's meant by market profiles, and this is a super important part of turtle soup. So there is so I can talk for days, but I'll try and filter out the information. So rejecting lows, breaking highs, while creating higher highs and higher lows. This is turtle soup. Now, as we know, markets move in expansions and consolidations, correct? Do you disagree? Anyone? Nope. You better not. Consolidations and expansions, right? What is the meaning of consolidation and what is the meaning of an expansion? Someone, let's start with the consolidation. What is the meaning of a consolidation? Because we have to be able to explain every single price leg in price, right? With a logic and a narrative. So what's the meaning of a
consolidation? Price
Consolidation means.
So in a consolidation, price actually the market builds up liquidity on both sides of the market.
Right. The market makers control the market. They have a job to generate interest in price, to suck in participants, right? The way they do this is through the power of three, which is not a new concept. And for the neophytes who think it's an ICT created concept, go study a bit more. It is an old economic concept, right? So go and read some books, right? Accumulation, manipulation, right? Distribution. Which again, I repeat, is not an ICT concept. It is one he popularized, like most of his stuff, right? Props to him. He's the mentor. Thank you, ICT, right? Mwah, ICT. Thank you very much. You're the mentor of the mentors. You're the best. But he did not create these concepts. Know your history, all of you, right? Now, he did refine them and combine them in one place, which is good. So good job on him. Nobody else did that, right? Gann, Wyckoff, supply and demand. He combined them all in one place, right? And made them popular. So without him, none of us would be here. I wouldn't be here. I wouldn't know this stuff, right? But know the history of what you're studying. Don't just blindly follow. Think and know the history. So, all that to explain the power of three. Accumulation, manipulation, and distribution. Now, what's happening over here in this pattern? There's always the market makers fucking someone over and somebody getting fucked over, right? Accumulation is generating interest on both ends of a range, a clear defined range. Now, this is where turtle soup is cooked, so pay attention, right? A clear defined range, it breaks through the range, grabs the liquidity, accumulates the liquidity from above these highs in order to distribute them below these lows, right? And then, of course, expansion in order to sucker in more participants. So they're generating interest on both ends. So breakout traders are looking to buy and sell a breakout, right? But breakouts don't occur the way that turtle traders think. They occur in a specific logic and pattern at a certain key level at a certain time. You combine them all together. You don't just blindly follow a pattern. Let me drink some water. Bismillah. You guys can take a break too. Have a drink or something for 1 second. So there's a logic and a pattern behind every move, and a pattern behind every price move. You should be able to explain to me, what's this price move do? What's the narrative and the context and the bias? Based on what? Right? You can't just blindly say shift, order block, FVG. Why? What is each PD array? Maybe in the future, I'll be dissecting. I'm dissecting the order block, right? I'll be dissecting each PD array and the logic behind each PD array, right? I've done the FVG and the order block, and maybe the rest later on. So, accumulation, manipulation, distribution. The purpose of a range is to accumulate and generate interest on both ends of the market, correct? And then trip one end of the range to the other, right? We'll see live examples, don't worry, for those of you who are critical of drawings. But the way to learn, for those of you who may have a slight subconscious issue, the way to learn is to first try the most basic concept and then build on it later on, right? You can't go and apply the most advanced concept without understanding the basic one. You can't go and trade a 1 minute chart blindly without knowing the higher time frame. So range, the purpose is to accumulate, generate interest, manipulate, and then distribute, right? That's a fucked up drawing. So, what is an uptrend, my friends? Describe to me the logic of an uptrend. The mic is yours. There's around 20 people at the mic.
Price
Consolidation,
respecting
expansion,
ADAs.
consolidation, expansion.
One by one. One by one.
I would say
Process.
consolidation. Sorry, you can go ahead.
It's okay, man. Go.
Okay, I would say it's consolidation, expansion, consolidation, expansion. In that phase, that's a trending market.
All right.
Consolidation, expansion, and replacement.
No.
Yeah. Any other answers?
In trending market, if it is bullish, it will be breaking highs and rejecting lows. If it is bearish,
Very
it will be
good.
breaking lows and rejecting highs.
What does that mean?
If I may. So in an uptrend, even though price is moving up, people will still be protecting their positions at swing lows. So
Those
before
people.
dumb money,
All right.
right? So they're always protecting and moving their stop loss up. So what the smart money will do is they'll sweep those lows to grab more liquidity and knock people off their positions before moving in the true direction of order flow.
Right.
And that's what keeps repeating until they're net short again.
Very good. That's the closest answer, right? Don't repeat patterns. Repeat a logic. And if you're wrong, dissect the logic, right? And you realize it's the same logic, which is repeating again and again and again. It's simply it's a matter of you being in sync or not, right? Because once you know the logic, once you know price, all of you, once you know price, then after that, it's simply a matter of being in sync or not, because you know how price moves, which is why the foundation was all about RR and the irrelevance, pretty much, of an edge, right? And then the next 7 hours talking about an edge, right? We have to be in the correct frame of mind. You have to think correctly. So, you are correct. Highs and lows can indicate to you whether smart money is net short or net long, simply by looking at highs and lows, rejecting highs, breaking lows, right? Example, we'll see at least 3 examples. Some old, some recent, more recent. So what's happening here to this low? What is this? What's happening here?
Rejection.
What's happening to this high?
Breaking.
What's happening to this high? Broken or rejected?
Broken, it's closed above.
Broken.
Very good. Again, a characteristic of a true breakout is an initial rejection followed by an expansion. That's a real breakout. That's how you classify whether it's a good retest, quote unquote, candidate for a continuation play, right? What happened to this low here?
Rejecting.
Right, so rejecting highs, right? And breaking lows. What happened to this low over here? This low. FVGs are lows, yes or no? FVGs on the lower time frame are a swing low with liquidity blowed. So what happened to this low? Broken or rejected?
Rejected.
There was a pause, huh? Rejection is the refusal to expand above a high or below a low, whether it's instant rejection or consolidation below the low or above the high, right? And because price is breaking highs anyway,
We expect it to continue. Discount low, right?